Good morning, traders, and happy Monday out there to everyone. Hope that y'all had a nice weekend there in store, and we should have an interesting week lining up in front of us here. And just before we go diving into the charts, it's just good to note on the U.S. side of things. Relatively light on the economic calendar there today, so no major items on the board that we'd be concerned with. Just kicking our day off there with the Monday. We do have crop progress report after the grains close there. So just on a little separate note, since our board is pretty quiet, that is one thing on the board to have on the sheets. So pretty clear cut though, with that being the one exception. And then we'll be able to jump into our daily charts over here. We'll have our S&Ps here on this bottom left-hand chart. And without a doubt, we know we had a very nice and visible 3 days of high to low, right, with lower highs and lower lows along the way. So coming into the session here today, at least in the overnight session, we've been keeping it as an inside range bar and or just trading inside of Friday's range, which for the matter, 5606 previous day's high, and we have 55.42 as the previous day's low. So as we know, is a relatively sizable range to begin with, and so far we were keeping it as an inside range bar. In terms of dissecting the dailies, looking on the left-hand side, we know that we have a previous congestion zone, or little tiny volume node that we had built out from our price bar overlap phase. So we came down, briefly tested in towards it, regained some footing, and now we're trading as an inside range bar. So with that said, we can also see, of course, our daily 5 SMA now with a negative slope. So as we pause, consolidate, the 5 SMA still looms further up above, coming in at 56.19 half. We've already had quite a bit of counter-reactive lift, so even if we did trade up towards that daily 5 SMA, I would be looking for any type of pausing activity around that point. But where we'll start to see a lot more detail is over here on the 120-minute time frame. We did close Friday with a bit of loss of momentum, just in terms of the oscillator or the tightening in the lengths of the swings. Thing is, we've already had a lot of this unfolding overnight, or we've worked off some of this buy divergence on the 120-minute chart simply by reverting to the 120-minute moving average. But what's nice about the 120-minute display is that we'll still have plenty of points of interest. If we blow this out nice and large here, we can see, of course, up above. It's a ways up there, so we're still beneath it for certain. But 5610 would be like overhead resistance, since that would be kind of the start of our big or lower developed area up above, or like a single print zone. And then likewise, since we already reverted here towards the 120-minute moving average, if we were to back off at all, what we haven't seen much of outside of the reopening is any type of major higher low structure. So we have 55.70. If we were to soften up or consolidate back down at all, as being a nice point of interest there as well. It served us on Friday's trading, so it would still be a value going into today's activity. But truly, the 120-minute chart in its finest form here, just the only matter is that we've already had some counter-reactive lift or reverted to the 120-minute moving average, which essentially coming in right around the 55.86 handle. So these charts should go nicely in conjunction with each other. The 120-minute display here for that of our S&Ps already having some boost, still beneath the previous day's high, which we could always have on the sheets there as well. Just again, that's the 06 mark there from Friday's trading. So any further up there, we'd be dealing with the previous day's high, which would be, of course, a valid reference point for us. So that's our S&Ps in themselves there. We'll also take a quick look over here to that of the DAX. Right, since the DAX as well had a similar formation with its 3 days of high to low. And we've also regained some footing here in the DAX. Thing for difference here is that we have indeed traded on the other side here of the 5 SMA daily, coming in at 18,521. So in a testing phase, working with respectable counter-reactive lift. On the intraday charts for comparison as well, no real divergence like we've had here in the S&P. So in the case of the 120-minute DAX, what we are seeing here is more of just a simple counter-reactive lift up off their lows. We had the 18362, which served us fairly well. But coming up into the zone here, what we'd be running into is indeed some overhead. This previous cycle high will be important for us, simply because if we're using just traditional wave structure or technical conditions here, our cycle high, we pulled back and put in one lower high, and that was our second lower high. So as we come back up into that zone, if we do indeed fall short, we'd continue with this mild cycle of slightly lower highs and lower lows on the 120-minute chart. So viewing that zone as being an important area as far as the DAX future goes. Just mild bit of slanted trend lines if you were to take that 120-minute chart, and or you could just simply call it slightly lower cycle highs on the move back down here. So that'll be on the radar there for our DAX future. We have the euro currency next in the queue here as well. These 120-minute displays serve fairly well, but always starting with the top-down visual. As we well know, last week, we got the full look above. We did also do it in the form of a sharp up, sharp down. So we did proceed to fill out some range on Friday's trading. We're just at the very bottom of this 3-bar balance mode that we had formed there last week. Obviously quite visible here on the 120-minute display. 1.09030. Valid area simply because we have our nice one data point that we came down, tested, respected it, and then at the very tail end of last week we came back down as well and traded back in towards that region. So 2 separate data points. You can even call it 1.09 even. 1.09030 is the actual low, but very close to that round figure. So I like monitoring this 120-minute display with that of the euro currency, and we could even take it down a notch from that point. If we were to go down to something like an hourly display, you'll start to see just a more severe case of the testing nature, right? Separate testing, holding up slightly, a little bit of a higher low, but relatively contained overall here at the moment in that of the euro currency. It'd be very similar to looking at the inverse case there of the dollar as well. We had our sharp down, the breakdown from the 3-bar balance mode, and we just come back towards the initial balancing zone. So it would be very similar to this zone that we had in the euro currency, where we farmed our 3-bar price bar overlap, had a range expansion up out of it, and as ultimately where we also got the failure test, or the U-turn at the top of the swing. So back inside of this wider range there, see it on an hourly or a 120-minute time frame there for that of the euro currency. Okay. And then we have the gold, the GC, obviously a much steeper decline or range expansion bar that we had with that of the gold. Primarily the item here that we'd want to note, of course, Friday, even though it was a very large bar, breaking down from balance or range expansion down from 3-bar. So the low from Friday, 2395.7. Good to have on the sheet. Thing is, we've already come down and tested that or gotten that out of the way, so the follow-through component we can certainly check off. Wasn't by a whole lot at the moment, just by about 5 to 6 ticks, but more importantly, range expansion down from balance, small degree of follow-through. Then we can come over here and assess our 120-minute display. Very similar, a little circle at the top there indicating the balancing act, right? Very similar kind of to that euro currency, right? Failure to make a new high. Then we came down and filled in a lot of the blanks. But into the zone, 2401 is still a valid area there for that of the GC. What we're working with here is a slightly lower low. You might see this a little better on like an hourly chart. We'll dial it down just for a quick moment here so we can see it. So our range expansion came down just enough to nick the previous day's low, so we can check that one off. In terms of overhead, right, in terms if we were to firm up at all for 2401 would be a valid zone, right, previous cycle high, so we'd be using that as a bit of a hurdle, right, and then of course we have the lighter developed zones overhead, but likewise, in case we continue any further in the gold, viewing 2383 zone as being a area of interest for us. That's just where we initially accelerated or had the better range expansion to the upside in that of the GC. So any further down, we'd be coming back to the original breakout zone with that. But for now, could give them some credit. Right? Already got the test of the previous day's low, not falling out of bed too far in terms of the continuation factor, but still will indeed, have some work cut out for them. Right? We have this quite healthy bar from Friday that we'd be dealing with there, in that of the GC. Alright, so that is our gold. Then we have the crude, right? Crude also giving quite the degree of range expansion. For a mild difference, though, crude's not necessarily breaking down from balance, meaning a 3-bar balance mode, as we had there with the GC. But still with the crude, as we know, range expansion down Friday through daily 5 SMA. One of the larger range bars that we've seen in quite a while. And we also note new lows on our 2-period rate of change, just indicating that in that particular case, right, we had moved quite substantially. So we had our nice new low readings. Good to have the previous day's low on the sheet, even though we've already traded well through it. Right, still is going to be serve as overhead, right? Even if we pause and come back up at all, coming in at 78.59 for that of the crude. On the 120/240 minute displays, right, below it ended up nice and large here. Little box area here from the past, that was to indicate our price bar overlap there on the dailies that we had for quite some time. But we were able to breach the bottom of that, right, forming additional continuation. So on the other side here, just as how we had a small congestion zone from here in the past, if I were to take the liberty and grab ourselves another little blue box zone here, and just mark off this small congestion zone that we had built out there with that of the crude. So as we come down, we're coming down in a 2-part wave, but we have quite the congestion here. This goes all the way from 78.59 down to 77.07. So working down any further here in the crude, we'll be running into that general zone, and then we could start to be on guard for these lower time frames. Maybe an hourly or 30-minute display of data, seeing if we do showcase any signs of loss of momentum or divergences. Clearly, for now, that hasn't been the case, right? We're making lower lows with good lengths of the swing, so even on an hourly display here, right, big impulse down, brief consolidation, and working on that second component here currently. So still well below the previous day's low. I'm not seeing many signs of major counter-reactive lift. What we'd really need to see there for the crude before really regaining any footing as any type of higher low structure or test reject into previous little volume nodes, things of that nature. So at the moment, still having some zones to latch onto for that of the crude. For now, I'd be using 78.59 as a bit of a reference level there for that of the CL. But picking up nice steam there, and we'll see how we want to handle those new low readings on that 2-period rate of change. Alright, then we have our bonds here to wrap up our groupings here for the morning session. Bonds for comparison, a tad more similar to that of the gold. We did have 3-bar balance mode coming into the session on Friday, coming in on Friday. We had our mild high to low trading outside of it, but still at the moment, what we haven't seen to compare up against the gold is a test of the previous day's low on the next day, which would be today. 118.31 is where that level comes in for the 30-year bonds. So simply just because we had the breakdown from balancing act, oftentimes we see a trade towards the previous day's low, if not through it, on the day following. So that data point's going to remain looming there for the bonds. I do like the 240-minute display here. Of course, it's going to be relatively similar to the daily chart, but why I like it is because it really shows this big congestion zone that we came back up in towards the 120.17 down to the 119.16. Quite a lot of time we spent developing there in the bonds. You could see that on the daily chart and or the 240-minute data. So not only did we come back up into the area, we've also been spending some good time up into these regions. So 240-minute chart really highlighting as well what we have going on here with the daily. But with that said, I still would like to carry forward Friday's low to today. Any testing further down, that'd be a well-defined reference point for us. Proceeding down from the 240-minute display, looking at an hourly or a 120-minute chart. Doesn't really change a whole lot in the composition. We had a reopening up off the low and really have been rotating in a relatively normalized sense there. So the 120/240 allows us to take a step or two back, noting as to what we're dealing with inside this previous congestion zone. And then the daily charts just gives us that mild component there, still keeping an open mind there on that previous day's low since it still remains looming there for that of the bonds. And then our last group here, which is also in the fixed income category, but a notch different than what we have in the U.S. Fixed income groups, would be that of the boons here. First of all, let's zoom these guys in. So the boons, for comparison, a little different than the bonds in that we've been on a tad more of the extended run or consecutive closes on one side of the 5 SMA. You had your set of 3, 6, 7, 8, 9, and then we were working on day 10. Right, we first closed back beneath it there on Friday. Right, so on the sheets, right, we had it flagged as 5 SMA buy. But what we've done is tested, but obviously have not closed back above it as of yet since it's early on in the session. However, coming in at 132.30 in the case of the boon. So it gives us a slightly different feel for that of the bonds. More of a simple retracement here on the 120-minute display. Not giving up a whole lot of ground, but we are going through a mild, digesting phase. You could see just the nature of this channeling action, right? The higher cycle highs and the higher cycle lows that we had been putting in for a small period there, and then this is just helping to highlight our first instance of a bit of a pullback or consolidation phase after having this broader, channeling to the upside to 40-minute there on the boons. All right, so a little different than our bonds, but still ones that we can always keep track on there. So with that said, we're going to grab this back here, get our 120-minute S&P loaded back up. We already reverted to the 120-minute moving average, so further up from here, we have the 56.10, kind of into that zone where we start to enter closer towards those single prints. So we'll want to be aware of that. And we're just going to grab this daily chart and get that adjusted here. And then we'll be on our merry way here for this nice Monday coming on up in front of us here. But good developments overnight for a lot of these groupings here that we'll be able to latch on to. So let these all get settled in. No major morning data points that we'd have to concern ourselves with there. So we're in the clear on that item. Alright, so we'll dial it back here. I'm just going to get a couple other items adjusted, and we'll be rocking on away here.